headlines that we are tracking from the world of commodities. But first up, let's take a look at the kind of moves that we are seeing in the oil market. And Brent Crude has cooled off quite a bit. In fact, as we speak, Brent Crude is now trading at $107 per barrel, which is a decline of about 1.6% in today's trading session. And crude has also snapped its 3-day gaining streak. This after leaders of US and Israel reassured investors that perhaps they could come up with a solution and the Strait of Hormuz could be reopened. Some important comments that came in from global leaders, and that is the reason we have seen some bit of cool off when it comes to the oil market. Shifting focus to the precious metals basket then, and spot gold is now trading at $4,700 for 1 ounce. It is up 1% in trade today, and gold has now snapped its 7-day losing streak. Silver too at about $72 for 1 ounce. It is flat today and it has snapped its 3-day losing streak. So those are the latest moves that have come in from the precious metals basket as well as the oil market. But as promised, let's shift focus to India's rice exporters then. And India ships both Basmati and non-Basmati rice to several Gulf countries. Nearly 80% of India's Basmati rice exports are destined for Gulf region, and around 35% of total Basmati rice exports actually go to Iran alone. But crisil believes that India's Basmati rice export volume is expected to remain steady this fiscal and next, and this despite the constraints that we are seeing in West Asia. They say that exports to Iran, a key market, are likely to be affected, but higher demand from other markets in the region, including Saudi Arabia, Iraq, UAE, Yemen, will provide offset, is what they believe. To discuss this in greater detail, we now have Mr. Rahul Guha, Senior Director at crisil Ratings, who is now joining us. Mr. Guha, afternoon. Thank you so much for taking your time out and joining us here on ET Now. Street was of the opinion that Middle East conflict could weigh heavy on rice exports, but you firmly believe that Basmati rice exports have been steady over the last few days. If you can take us through the rationale of what makes you believe this?
Thanks, Ashisha, for having me here on this show. So what we believe is Iran definitely happens to be a critical market for Indian Basmati exports. Almost 15-20% of the Middle East consumption happens in Iran. But what we are also seeing is some of the other Gulf countries like Saudi, UAE, Yemen, Iraq, etc. I think they are also consuming rice. They are also stocking up some bit of Basmati in light of the current conflicts that's going on. So we anticipate that some of these Gulf countries, the market is going to grow at about 5 to 6% for Indian Basmati suppliers. And that will kind of negate the impact that we are seeing from Iran. But having said that, we believe that this shift or this temporary shift to other countries in the Gulf is more of a tactical and a temporary one rather than having any a fundamental change or a permanent structural change, as we would like to put it that way, because Iran will remain critical in the long term for India.
Right, I do understand that demand from other countries, including Saudi Arabia, Iraq, UAE and Yemen, are expected to be higher this time around, and you are saying that that will compensate and fully negate the impact. But aren't logistic and other problems an issue for you when it comes to export to these countries?
Yes, definitely. I think what is happening is the logistical issues, they are playing out. Availability of vessels is a problem. The insurance risks have gone up, so the insurance premiums have gone up. We are seeing that there is some stocking happening at the Indian ports also. What these players are also doing is they are looking at some alternate routes right now. So the Strait of Hormuz, as we all know, is the major challenge at this point in time. To circumvent that, I think some of the players are looking at alternate routes through the Middle East, which includes say Saudi, through the Red Sea, or through the Jeddah side, or the Jordan side, or even Turkey and Oman. I think some of these routes are being looked at to circumvent some of the logistical challenges that the players are facing. But having said that, this is a problem for sure. And if it continues for a very long time, I think there is going to be some impact on the trade volumes also.
Okay, so credit volumes are likely to be impacted. But Mr. Guha, if you can take us through your estimates when it comes to volumes, what kind of volume growth are you penciling in for this year, and what will your expectation be had this West Asia crisis not occurred? In both cases, what kind of volume growth are you expecting?
So I think the volume growth expectations, if this would not have occurred, I think we would have continued with a 15 to 16% kind of a volumetric growth. That's what we have seen in the last 3-4 years. So if I just like to put some numbers in perspective, between 2021 and 26 estimated, the volumes have almost grown each year at about 16 odd percent, apart from 22, which was the COVID year. So that's the broad number that we were expecting this year also. The Iran conflict that is now going on could shave off some 2-3 percentage points in terms of the volumetric growth. But as we said, the Gulf might compensate for that. So it's a little wait and watch kind of a thing. So we are still holding on to about 15 to 16% kind of a volumetric growth for the year as of now, at this point in time.
Right, and since we just spoke about the impact of rising logistical problems and the fact that freight rates have also gone up in the global market, is that being passed on to the ultimate consumer and the buyer? And how are exporters of rice from the domestic market combating the impact of higher freight costs?
So it's a kind of an inelastic kind of a market where it's completely a pass-through that we have seen in the past also. Because we have to understand rice is a staple in the entire of Middle East and West Asia, and there isn't any substitute at this point in time. There can be some bit of a substitution that can be done by the parboiled rice that Middle East and South West Asia they import from Southeast Asian countries like Vietnam and Thailand, and some of the other aromatic and fragrant long grain rice that they also import. But that's not a clear substitute or a easy substitute for the Indian basmati variant. So I think from that aspect, it will be a pass-through of all the prices that happen. We are also seeing that some of the players are now switching from a cost insurance and freight model, that's a CIF model, which is the typical model that the exporters follow. From that, they're moving on to a FOB, which is free on board terms, wherein the entire responsibility of the cargo gets shifted to the buyer. So I think the risk gets transferred completely to the buyer. I think some of these changes in the model is also what we are seeing.
Okay, and I believe the transit time must also have risen on account of the problems that we are seeing globally. What kind of impact is this having on the working capital requirements of India's rice exporting sector?
Yes, you are absolutely right. So from earlier, say 20-25 days kind of shipment period, we are seeing that the shipments have gone up. The period of shipment has gone up to about 35 to 40 odd days. There will be a marginal increment in terms of the working capital requirements in the interim for most of the players that we are seeing in this segment.
Okay, and let's also talk about demand from countries other than the Gulf region. How has demand, which other countries, part A of the question, which other countries do we export to? And second, how has demand been from those countries?
So apart from Middle East, India does export a sizable amount, almost 15-16% to the US, largely North America, and also to parts of Europe, and some bit to African countries also like Nigeria. It's almost about 15-16%, as I said, of the total volumes that we do. And these countries are growing. I think we are seeing high double-digit growth in terms of demand from these countries as well. To just share a perspective, we used to do about 0.4 million metric tons of basmati rice to these three geographies, that is the US, EU, and some bit of Africa. Now that has kind of moved, almost doubled to close to 0.9 million metric tons estimated for this particular fiscal. So what I'm talking of is almost 20-23% annual growth in volumes is what we are seeing from these markets. A large presence of Indian diaspora, the South Asian diaspora, which is present in these geographies, I think that's something which is driving the demand. Plus, Indian basmati is of premium quality, and some of the quality standards that they adhere to. I think these two augur really well for Indian exports when we talk about the non-Middle East regions where basmati could grow, or basmati exports could grow.
Right, so that's as far as the demand environment is concerned from world market, whether it is Gulf and other countries. But if you can take us through your revised estimate on the revenue front, on the volume front, and on the margin and profitability front that for FY27 for India's rice sector that you're working with, given everything that is happening globally.
So I think largely it's a cost pass-through as we discussed, so we don't anticipate any major decline in the operating margins for the rice players. On the volume front, we already discussed that we are looking at high double-digit kind of volumetric growth continuing even in this year. From a revenue front, we believe that 6 to 8% kind of a revenue growth could be anticipated for FY27 if the escalation of this war doesn't get beyond, say, maybe another 15, 20 days at best, if it goes beyond that to somewhere around the next quarter and all, I think there will be some revision in the estimates then.
And if you're talking to rice exporters and if you've had conversations with the industry on ground, what kind of realistic problems are they facing, and if they've made any appeal to the government to combat the problem, any kind of solution and resolution that they've come out with?
Definitely, availability of vessels is a challenge. We are seeing some stocking happening at the Indian ports. So there are logistic challenges. The insurance costs have gone up. So there are challenges that these players are facing at the ground level. But if you look at the last year round also, when the Red Sea crisis had struck and similar kind of issues were being faced on the logistical side, what these players had done were they looked at the Cape of Good Hope to route all the transport or the exports to the Europe and US. So I think there is a bit of resilience we have seen in these players in the past. They do take proactive measures to combat some of the situations, and government support has been there in the past as well. As of now, we are not very clear on what kind of government support could be coming in. But yes, the challenges are for sure. But they have proven their resilience in the past. So we believe that considering this is a staple and India is one of the major producers and exporters of Basmati, I think players will be able to tide the crisis well this time as well.
Right, so that's as far as India's rice exporting industry is concerned. Mr. Guha, thank you so much for taking your time out and joining us here on ET Now.